Good morning, guys. Sorry, I could not figure out if this was running or not, but it looks like it is. I have a live trade in the market. If anybody's interested, and we'll talk about what it is and why in a moment. We're just waiting on some economic data that looks like it's going to be kicking off for the European sector or European space very, very soon. Let's just have a quick check around the markets. FTSE 100 struggled a little bit. Gap to the downside is suggesting some heaviness on the open. If we look at the German, the DAX as well, just popping itself above that weekly pivot would suggest a little bit more upside. But I wouldn't be surprised to see this caged in here somewhere around another 50 pips to the upside. Would be a potential weak spot for the DAX. I am looking for downside actually in these markets, and we'll talk about why in a moment. But you know, just looking at where the opportunities might be. The S&P looks pretty good at this stage. Not amazing, but it looks pretty good at this stage for a potential move to the downside. So I am looking for a downdrift. Good morning, Shukri, and good morning, SF. It is just me at the minute. I think we'll be maybe joined by Orlando later on. As I said, have got a trade short in the S&P currently, and I will let you guys in on this. We are fighting the trend here, so it could be a very, very difficult trend. I've got my stops at the highs, and it would need to fail here. So if it starts to close to the upside here, this the pattern that I am trading is going to look very, very different. So there might actually be a potential for me to come out of this if it continues to move to the upside. So and I suspect we probably will now. Looking at the equities, you know, the what we've got, looking at how these equities appear to be opening up, doesn't look like the timing for downside is just there yet. But I am looking for downside. Now this is the first day of September, which is why I quite like it. Actually, there's a few things that I like about this, but the other thing I like about this is the potential reversal pattern here, which I'll show you. So we have no Jeff this morning, so we don't have the pound trade. There is the neckline, and I'm just looking to see whether this is a head and shoulders going on here. So there is the reversal pattern, and I'm just trying to pick it up here on this right shoulder. See if that starts to come down again. Oops. See if it starts to come down again. You know, if you're interested in going in, always go in light on a shoulder move. But the thing about looking at this is that it comes and meets this trend line here, you see. So there's a trend line break. So it could actually pop up a little bit and I'd still feel fairly comfortable as long as the bar closed down at the lows, then I'd be okay with it. But it looks like there might well be that the market could be under a little bit of stress. Now we do have some economic data due very, very soon from Germany, and that could it could push the market one way or the other early doors. But we were looking at the VIX yesterday, and the VIX actually took just a little bit of a pop to the upside at the close of trade yesterday, giving the monthly bar a quite a well, let's call it a bullish look for want of a better term. But we'll look at that again in a moment and see what it looks like. In fact, let's look now. So we'll run through the potential analysis of this and what messages we're getting. So this here is the VIX. This is the VIX, and the VIX yesterday on the day ended here. This for some reason this one hasn't opened up. But look at the bar yesterday. That's an engulfing bar there, and it comes at the lower end of a range as well. So looks like it could be bottoming out down here. I thought the most significant time frame to look at the VIX on was the monthly, because the this monthly bar is suggesting a hold. We talked about this yesterday, but look at that. That suggests a hold. Now, this is suggesting that maybe the volatility is about to pick up in these markets, and there could well be some opportunities not only to trade this on the short term, but also to get into some of these where we haven't had the opportunity to get in. So we are looking for a pullback in equities. And the pullback, a pullback will be anything in the range of 3 to 10%. So I guess somewhere in the middle would be around about the 5% mark, and that's what I'd want to see really before I was interested in getting into these markets. So what I'm trying to do here is short at the top here, or if it is the top, but shorting it in this particular area. Look for that 10% move to the downside, and if we get it, then start to build positions in on the long, because the market is certainly hot. The numbers and the data look pretty good. They don't look too dusty at all. And the question would obviously come in: why then short? Well, the reason to short is because the market is going to start getting exhausted at some point. It's gone very, very fast, very far, I should say, very, very fast. You look at this since June, but coming back right the way since the bottom of March. We've just taken really two legs to the upside, and we've only really had a pause here in May and a little bit of downside in June. But even then, let's have a look at this with a measurement. Look at the S&P just so I can measure. So looking at this on the daily, this was the last pullback we had. Yeah, that's come down 7.57%. So the pullback would need to be somewhere between, as I say, well, 3 and 10. I mean, the reason I say 3 is because the market's so hot, it might only want to do 3, but really we should be looking between 5 and 10%. So I'm looking for that on the market. Now, if that was to happen from here, that brings us to this area. Now, 3%. Yeah, 3% brings us down to 33.90. And that would probably be my first point of call. So a 3% drift to the downside, and I might start getting interested in the long. If it was to come down there, then it might be more of a profit taking area if the downside trade works out. And then I would look for maybe to pick this market up a little bit lower. There are some trend lines here as well. So at this current stage, I'm just looking to see whether I can get the downside. There's the trend line there. There's the last kind of leg to the upside there, and that also suggests that if it is to come down, then it's not going to come down very far. That's but depending on timing, the trend line and this particular level could meet. It may be a little bit lower. It might come down just to this point here and rest there instead. So looks like between 3 and 5% would be an achievable target if we see some weakness here. So that's what I'd quite like to wait on. Yeah, that's going to be 4.9%. So let's have a look at some of the reasons why that might happen. And we talked about the election yesterday, and we talked about the potential message that we could be getting here. And I'm going to bring the VIX back in. The key with the VIX is when we see a pop. Now, June was the last time we saw a pop in the VIX, and that was the 7% drop in the S&P. And obviously, you're trying to trade the VIX when it pops. Try to trade the S&P low when it pops. But look at that. The VIX from the lowest point there to the highest point went up 80%. Now, all we've got here right now is a pop of 25%. But that does tend to be quite significant when the VIX pops up 20%. It does tend to be quite a significant move. Now, it would 20% and more. It does tend to be quite a significant signal for us. So that I am looking at very, very closely. Yes, we needed to go higher, but it does look to me like we might be just got a bottoming out pattern. And as I say, considering what's happened with a monthly on the VIX, it would suggest that that there is a higher probability of a pop to the downside. Now that's the breakout point as well, right there. So there are a few things to consider, and that's what I'm considering with the story of the VIX and the potential story with the election as well. Now we need also to look at what might actually be the fundamental driver to the market. You know, what's going to bring the market lower. Let's start with Forex Factory. Now, there's a few things that that would need to come into play, and there would have to be a catalogue of events that would bring the market a bit lower. Let me just quickly check something here. 27. Yeah, that looks okay. Yep, I'm just checking checking another trade I've got on there. Okay, so we would probably need to start with this. I mean, this would certainly help get us on the way if we started to see a move lower in some of these numbers here: Italian manufacturing, French PMI, and German final manufacturing PMI. The German one's the real interesting one. Now, we have had reports that Germany are expecting a contraction to not be quite as deep as they thought. You know, that's really what they're looking at, a contraction to be slightly better than previously expected, and that will be expressed somewhat in the manufacturing PMI. But the real number we're waiting on, mortgage approvals. I mean, this does tell us a little bit about the health of some of the US UK economy. But the real number we're waiting on is going to happen during the US session later on, and we'll stick around for this number just to check what the number is and how that might start to drive the market. But this is what we're really after. What's the ISM doing? It's had a pretty decent run ever since the pandemic. You look at this sort of, that's May. We did see a little bit of weakening towards the end of last year, but February was quite low. March was coming down. Then we start to get the real drop: April, May, June. But the pop to the upside has been pretty significant from the lowest point to the highest point. So the inevitable expansion that's happened in the equities is not too surprising, really. You know, ISM manufacturing is a really important number. So we've seen a pop to the upside in those global equities, and what we are after now is to see whether this starts to weaken off a little bit. Does it just start to come down just a shade? Because if it does come down a little bit, then obviously we would be looking for we'd be looking for the equities to also start to follow it lower. So I'm waiting on that number. I think that's quite an important thing to look for. Let me just see something here. Let's got to check on one thing while we talk. Let's see what we have. Okay. Just checking out some stocks here as well. Yeah, we're just having a quick look at some stocks here. Just make sure that that we are in the right place. Sorry, I'm just going to be a shade distracted for a minute while I sort this out. Oops. Seems to be a bit of an issue with some of these quarantine situations still going on. We've just seen Portugal potentially added to the quarantine list from the UK, and I'm really interested in travel stocks over here. And you know the travel stock space will not do very well if Portugal is added. It's one of the most popular destinations for UK holiday makers. So ISM manufacturing, very important. ISM manufacturing prices, that's going to show us inflation. And we've seen some of this inflation data actually weaken just a little bit. You know, we're going to look at gold and silver in a moment. But look at this CPI month over month, preliminary CPI month over month, weakening in Germany. And I'm pretty sure that is flat from a year ago. So we're not seeing prices rise. Now, that might be something to do with the fact that we had that relief package in Europe. So that could have put pay to that. Some of the manufacturing PMIs from China that were reported yesterday weren't very good, but we did see some expansion, I believe. Non-manufacturing wasn't the number I was thinking of, but there was a little bit of expansion as well, which was here, cakes and manufacturing PMI. So there's some expansion there. So it is showing that the global equity space is still managing to pick up some pace here. We did see also Australia leave their cash rate on hold, but there was a statement, and this is the stuff we need to read. Decided to maintain the targets for the cash rate and the yield on the 3-year Australian government bond. That'll probably say. Let's have a quick look at it and see what we got. See if we can garner anything from this. Now let's just check the manufacturing data actually before we do this. This will likely tell us what we've got in opportunities on an intraday basis. Initially, short term, Spanish manufacturing PMI. Oh, the German stuff isn't out until later, and it's that one we need, but this will give us a little gauge. Pretty poor. So it could be an opportunity in the IBEX. Now, if we believe in some weakness in the global equities, then the IBEX might be the place to put your money for a short. So let's just check on what that particular chart is doing. Where is that? I think it's this one. Yeah, EasyJet, still really interested in that space, Shukri, and it's going to be, you know, it's definitely a long-term situation with something like EasyJet. There's no point in getting in and getting out too much with that one, but I suspect they may suffer if this quarantine does come into play, and it's going to be too dangerous for EasyJet. I still quite like it. I still think there are opportunities in the EasyJet space. But let's see how that pans out. So what can we do here? That's actually okay there. Let's leave that there. and Ocado and Netflix. I mean, Netflix's revenue was just outstanding, and not too surprising in many respects either. Anyway, so the IBEX. So what do we got here, and what can we see? Well, that number's come out and it's already showing some signs of weakness. Now, the IBEX wouldn't be a bad place to put our money if we don't like the global equity space. Now, I think that there's a fairly good case to be made that we are going to see some volatility kick in. Now, whether that does kick in now is always going to be the question. You know, do we have the timing right with the volatility kicking in? And it looks pretty good. It looks like it's about to start. Now, we can't discard and discount the fact that we are starting the month, and the start of the month is notoriously, not the start of the month, sorry, the going into a new month is notoriously changeable, and it does mean that that there could well be a change of the baton of the trend. It's just a question of when it was to happen. Now, if you like the short in global equities, I think seeing some numbers from Spain that suggest that they are probably the ones to struggle would suggest that that maybe trading the IBEX might not be a bad shout here. Now, you probably want to see it up a little bit more, but I think it's going to struggle to get above monthly pivots. So watch out for the other spaces. You know, have a look at the other equities. See what you like. Consider Spain. I think the S&P is worth considering. We've just seen a 15-minute bar, which would suggest, you know, I'm in this already. And if you were getting in, you'd be getting in at the same price as I was. I think that there probably should be a soft stop just above the 35.20 level. So I can write this up. So this is for, I've got it down as US 500. And that's on a short. And I got it at 35.10. You're going to get a better price if you were to get in now. Alternatively, you might just want to wait and see if it strikes that level and causes some sort of reversal up there, because it looks like it's holding on here for right now, doesn't it? US 500 short. Now the stops are currently at 35.28. I've got them at. And the target is going to be at 33.90. So there's room for a target down there, but we're going to use a soft stop loss here at 35.18. I would have thought. And I wouldn't want to see it sustain its price action above that level for too long. And if it did, then I'd want to be out of the S&P trade. So that is going on there. That's what's going on there. I'm just keeping an eye on some other things here. That's all right. Yeah, we just got to be a little bit careful, because it looks like there could be a bit more expansion. Just in the VIX ease to the downside now. Gold is the other story that we should be talking about, and I know we may well be joined by Orlando later, but I'm not 100% sure. But gold is the other story, really. You know, it's not seemingly, and the thing is, you know, forget gold. The dollar is the story. Let me just delete, just bring that into a 4-hour. The dollar is the story. Now look at what's happening here. So this is the trend line here. So I wouldn't want to see it survive too long up there. I really want to see it down here. What I'd quite like to do, and what I'll do with this soft target, is effectively say, right, well, I will utilize the trend line, the soft target trend line, as a potential reversal bounce point, but I want to see the 4-hour close down at its lows here. I don't want to see the 4-hour up there, really, because you know, I believe in a short in these markets, but the timing may just be a little bit off here. Just double check something here. Yeah, that's going to look pretty good. So let me just do one thing. Right, I just want to see if I can do something more with the DAX. So far the market looks pretty keen, doesn't it? Market looking pretty keen. Now Ocado, I just looked at the price of Ocado, looking pretty pretty hot still. No major change there, and I suppose it could take a while for that space to change. There we go. Right. There we go. Right. Okay. Should be okay now. I was just making sure that that I would have an opportunity to trade this DAX as well. As I say, I quite like the look at that, just reacting off there, but I quite like these. I quite like these prices here. Might need to let it rest. Might need to let it rest up there. Now, if we believe in a short with these, it really does come into play. The issue is going to be that data. So we got Swiss PMIs out in the next 5 minutes, Italian and French, and then the German PMIs, not for another 25 minutes. So it's quite some time. So a decent push so far in these equities to the upside. Now I've chosen the S&P, but I wish I'd waited. I'd quite like this DAX. Just keep our eye on this S&P. $35.20. Can't get a close above that particular point there, so I don't want to see that really. Okay, so that is pretty much what we got now. Let's just double check the others. So UK 100 also struggling here. So we're looking at a potentially weaker market in the UK, possibly weaker in the US as well, and the German economy. We haven't checked silver. Look where silver is, almost back to its highs again. Just a grind forward, and it is indicative, really, of some concern out there. You know, we're seeing that the VIX posting some pretty decent numbers at a 20% hike in the VIX, and we are also seeing we're also seeing silver and gold, so those safe haven commodities really showing some higher levels as well. So there's quite a lot of information suggesting that there is protection going on at the same time as buying this stuff up. So I'm not sure whether we should be too concerned as the market pops to the upside if we do have any shorts in the market. Now, the other thing is some of these currencies. What's the Aussie done ever since that release? Now it has continued to move its way higher so far, But if global equities are likely to turn around, then I would suspect that that the Australian dollar would suffer. Now we have to consider how it's interlinked, and the way that the Aussie dollar is linked with everything else is that if we see a diminishing indication of growth, then because the Australian economy is very much commodity based, people need these commodities to build and do all that kind of thing. So if we see some diminishing growth, then what we will likely see is a Australian dollar that will weaken. You know, it's got a high probability of weakening because the economy is going to be built on trade done with their commodities. You know, the likes of copper. Now, I don't know if we have copper on this. I do have a chart for copper, but not here, I don't think. No, yeah, just looking at this, I'm seeing copper continue to move to the upside as well. So we want to watch out for these commodities. Now there is some COT data, which I was looking at yesterday, which suggests that that natural gas is the one. Goodness me, that is a surefire winner when it comes down to some of the COT data for the year. But we've seen pops in all the commodities really. And therefore it makes natural gas a tricky one to judge in some respects, you know, whether it's actually sort of like taken the genuine pop or whether it has just followed everything else. But the COT data in natural gas is fairly significant. And what have we seen with that? Natural gas currently at 260. Again, looking like a head and shoulders on that, but we'll have a look at that. So let's have a look at some of these commodities and see what they are telling us about global equity. So you can see here that the VIX is just weakening off somewhat. I think these prices might well be delayed because it seems to be a bit slow here. Look at the VIX on the 4-hour. So maybe the VIX coming back down to this point, but watch out for it there because the VIX is just like any other chart that you could read where the buying and selling is happening, and it looks like there might well be some of that going on. Yeah, I've got 2741, so that is slightly off with the VIX, slightly slower than it should be. So we see the VIX potentially giving us a turnaround, but let's check some of these commodities and giving us an idea about some of these some of the growth here. Whoops. Let's take that one and see what it gives us. That's pretty good. So look at the move in copper. Up. What we'd want to see here is copper starting to diminish in price. So if we think about the supply and demand aspect of all these things, that would suggest that that if we got a lack of supply with lack of demand with copper because of the lack of global expansion, then we would see copper. That we would see copper as a bit of a barometer for what's going on, and you can compare it to the S&P and everything else. Copper has really been expanding. It had a little bit of a pause around about April and May, you know, just the start of April and May, but really ever since then it's been moving higher. So where we saw the S&P cut back a little bit in June, there was a little bit of downside in copper, but not really. It's a bit of a pause going on here, though. You know, week on week, copper has not really managed to stretch itself any higher, and that would, at this particular point, suggest that maybe we're starting to get a little bit of weakness in copper. Now, the price again needs to come down to 4.8. So what's that in percentage here? I'll get rid of that. Yeah, that'd be a 7% move to the downside with copper, which is more than achievable. Right, 33s. Let's see what we got. We just had more data from the European space. And let's see what that suggested. At 8:30, manufacturing PMIs from Switzerland. Not bad, not bad at all. So that's that is suggesting that there's an uptick in activity in Switzerland. Not the big one by any stretch. Really, we want to know these last two here. And German unemployment change would help as well. Maybe the final manufacturing PMI might be the real number that we're after here, just to kind of give us an idea of what's going on. Oh, okay, yeah. Key levels on Bitcoin. Let's have a look at those. Okay, let me just do something here. There we go. Right, let's have a look at Bitcoin and the others. Yeah, Cardano, I think, is a very, very interesting chart at this stage. Let's just firstly check Cardano with the US dollar. I've got one more thing to do here. Right, one more thing quickly to deal with in the background here. Oh, there we got this 6, so we'll leave that. Okay, Cardano, ADA. Now I'm looking at this on a you can see it on either time frame, but I think the 4 hour is maybe the cleanest. Let's just double check. Maybe it's the daily, but no, let's have a look on the daily. Looking at this on this daily chart here, what I am seeing with Cardano is potentially that. So I would not want to be going long at this particular stage in Cardano. I don't like the left shoulder that much. Let me just double check where the line is. Yeah, it looks like it might even be a little bit higher. So possibly with Cardano, it could do with pushing into this area here. At 13 cents before it starts to come down. I think there are signs and signals that that all of these could be on a road to the downside. Difficult really with such a weak dollar to see what's going on with the price of Cardano or anything versus the dollar. But this does look, or it does appear that it's that it is creating a head and shoulders pattern here. Doesn't mean that it's going to work out. It just means that it's there. Now, let me just double check this as well. Looks like it could be through that one, but that point there, that also brings us down to near the 13 area. So 13.20 or something like that would suggest that Cardano would have to get above that level if it is to continue its move to the upside. So interested, yes, in Cardano, and I want to buy some of this up, but this is just telling me that maybe the price isn't right just yet. I might be completely wrong on that, and it might be a missed opportunity, and I would like it, but I don't see the opportunity yet. Let's check Ethereum. Interesting in a way that Ethereum also created this this head and shoulders pattern, but that has just gone. That's going again to the upside and making it very, very difficult. I mean, there's not an Ethereum VIX, unfortunately. It'd be nice to know what the options traders are doing with Ethereum. And I don't know if you have that information, Shukri, but that could be something of interest. So Ethereum still looks pretty strong. Bitcoin. Where are you, Bitcoin? Bitcoin dollar, there we go. Yeah, not quite as strong. There's a couple of guys that are putting up some opinions on Bitcoin. Let's have a look on the daily. You see, Bitcoin has got the head and shoulders feel about it. I mean, it's just difficult to know what's going to drive these markets lower. There will be something. There will be something to bring it down. Timing it is, potentially going to prove to be a very difficult thing. And I wouldn't be surprised if it is the US election that drives this lower. But that might mean that that we could be waiting on some time before we get any real movement in any of this. Bitcoin looks the weakest. I mean, Ethereum's gone, unfortunately. XCU. Okay, let's have a look at that. XCU USD. I have no XCU. Yeah, copper is very, very strong, and that is telling us about the expansion that's going on. But as I say, all of these, they will start to come down. They will start to come down. It's just a question of when, really. It's not a question of if. They will definitely drop, but a huge question of when. Now, let me just double check the S&P. It looks to me like it might be breaking to the upside here. Maybe not. Maybe that still looks okay. That would be a right shoulder still in play there. It would need to close above this level for me to want to close this trade off, which I will do. This is the hourly. What I'd quite like to see is the S&P still at 35.17 by the top of the hour. Now that might be dragged down with that German data, or it might just start to march, continue to march to the upside. So soft point there, really good place to get in if you like the short. And it does, you have to ask yourself that question with any trade that you are getting into. There's no point in me saying this is the way it's going, because I just like everybody else, I don't know. It could go either way, as we are seeing here. But if you like the short, it's a good price point, because it means if it closes above this point, you're out. You can put your stops up at this, in the same area as I've got them up here as a hard stop, just in case it flies. But if it does pop to the upside and close, then you can just close the trade off and say, right, well, the chart has said that that the buyers are still really keen here, so sticking with it at this particular point would not be a good idea. So there is an opportunity there. Right, we've still got another 10 minutes or so before that data point. That's a really good. Oh, definitely long, Shukri. Definitely long. I mean, it's just crazy. But the real signal came in July, and the only reason I looked at it, it's not, I don't. It's one of those things that I don't feel like I missed it because I wasn't looking at natural gas. I never do really, but I will start now. But the only reason I looked at it is because a friend of mine is really into commodity trading. And we were talking about natural gas yesterday. So I had looked through the COT data, and the COT data was suggesting that back in July there was such a strong signal for natural gas. But then when you compare it with copper and sugar and coffee and cocoa and all that stuff, there wasn't a signal, and yet those guys performed in the same way. So the COT data is quite tricky, really. But what we really need to find out with natural gas, which I will look into, is the seasonal aspect of it. And I suspect where if we do get some kind of seasonality with it, I suspect it would be probably quite a good thing to get into. And because we are looking at kind of winter in the northern hemisphere, you would think that natural gas, the demand for natural gas would probably go up. So I think there's probably a case to be made to suggest that the natural gas's run is going to continue. Now, did we look at nat gas? Here we go, natural gas. And as I say, it was July, which was, there's the 1st of July. So, if we trusted the COT data, that's up 63% since the start of July. And it just goes to show that it looks like we've missed opportunities when we see what's happened with global equities since April. But 3 months later, here's another opportunity. Completely different space and another opportunity. I mean, actually, even global equities are up by a substantial amount, but it looks like the consumer was quite happy to continue to use gas. Now the S&P on the same over the same period, start of July, 13%. So natural gas up 63%, S&P up 13%. Let's have a look at the Nasdaq. Over the same period, 12%. So there's certainly a case to be made by looking at this that we should not be discarding some of those other things, in the commodity space. Would be pretty wise, and this is why I will start looking at it in a little bit more detail, specifically the COT data, and also getting a seasonality on that stuff as well. and see how it reacts. You know, we're just looking to broaden our horizons with this stuff, really. You know, and you can see that if we stick to currencies and indices and discard the commodity space, then we really do miss out on a huge aspect of the picture. So not something that we need to do. Right. Still 10 minutes away from data. S&P looks like it is still right on the edge there. No, I just want to bring this data point back in. French PMI is coming out very, very soon. So let's just see what number that prints for us as well. Okay, 30 seconds. And all this will do, I mean, I wouldn't have thought it's going to reverse any trend to the upside in itself. It's just, you know, like a woodpecker just chipping away at some of these these data points, really. Right, French PMIs are out. Let's have a look. We'll check out the euro in a moment as well. See how that's reacting. Not bad. So it's under 50. And let's just see what 49.8 means. Actually, that is contraction. I don't see why how the previous was 49. Let me just see. September at 49.8. Okay, that's a little bit confusing. Because that's got... You look at I'm looking in this corner here. And I'm seeing August 52.4, which is the actual. And yet it's saying previous at 49.0. That's strange. That's still contraction either way. It's still not expansion. It would have been, the 49.8 would have been interesting if, you know, I don't know what the previous one was. I think I might have to check a proper source for that to find out whether that is accurate or not. What that has done to the S&P is just ease it off a little bit. Now you might want to wait for the top of the hour to see if that does have the opportunity. You know, that does give you a 15-minute bar. But as I say, you see how that was a really good price point, because now, I don't know if any of you traded that, but if you did trade that at that particular price point, now you've got a place to shift to stop. You know, stops can go now above this bar, because it's looking like this is a genuine area of resistance. So if that resistance is broken, then you won't want to be in. So if your stops are up here, then they can come down here. I'm not going to move mine just yet, because I did choose to kind of like give mine a pretty wide berth. But it does mean now, if it starts to maybe not even close above that level, but if it starts to edge higher above this level, then we're going to want to be getting out of this. So 35.20 looks like the new area for a stop on the S&P. Right, couple minutes before this German data, and look at what with the DAX as well. As I said, another good price point really with the DAX here. DAX is just starting to come off a little bit. Now look at the hourly. Fairly indecisive right now, but if the hourly starts to get below its open and hasn't got that much work to do before it does, it's going to start looking like a pretty negative indecisive bar rather than a bar of any positivity. Now this really is about these numbers here. I suspect these numbers are going to shape the morning for the DAX. Now these are short-term, potential short-term opportunities. We've seen the VIX pick up a little bit, which suggests that the volatility is higher in the market. So these yellow numbers become a little bit more interesting. Dollar index. Yeah, what's going on with the dollar index? Oh yeah, the dollar index is just a mess, isn't it? Which will continue to push everything else higher, and it becomes difficult with the likes of Ethereum and Bitcoin, because Bitcoin getting a push as well now to the upside. Interesting, isn't it? Yellow numbers don't mean anything. Well, they do on a short-term basis, on an intraday basis here. Now we'll check the euro out in a moment because we've got about 30 seconds before this German data here. Right, here we go. Let's have a look. Firstly, we'll have a look at the price action here as well alongside it. Right, data's out. Let's see what it said. Yeah, you see just a little bit of weakness coming into play. Now that is suggesting some contraction. So it certainly appears that we should be we should be short in these equities this morning. Now we don't know whether any move to the downside might create some upside, but if we are looking at fundamentals and we're looking at potential chart patterns that get us into the fundamentals, trading at the high would have been a bit of a punt, but we sell into the number comes out and it's weak, and it's likely. You see the reaction here. The reaction is potentially because we're still waiting on the German unemployment number, and maybe we wait on a slew, actually the slew of data here, and the next 30 minutes is going to be the key. Oh, so we've actually got this number, have we? Unemployment change down 9K, so better than previous, but not as good as expected. So we're probably waiting for this final manufacturing PMI. Now it would suggest that would be weaker if we've got Spanish there, French is slightly higher, German is slightly weaker. Let's just have a look at the chart on this. Actually, at 51, I don't know what's going on with this chart in comparison to the actual data. Let's see if we can find. Have to see if there's a more reliable source here. I'm just going to check another news feed. No, it doesn't seem to be. So we got consumer prices flat, and this is the thing I think that could be suggesting some softness. German consumer prices were flat. We're seeing just a little bit of weakness step in with some of these numbers here, without there being anything too significant. No, the market hasn't reacted hugely negatively as yet. but it may well do. Of course, we might see the continued highs in the S&P, but again, decent price to get in at. Decent price to get in at. Nice and tight on the stop, and there's always opportunities to add if it starts to go. So you can still go in really, really light. And it's all about protection. So we have to remember that, if we do believe in in a short here, then good price to get in at. But we can't just throw our hat in the ring and say that is that. Okay, now let me just see something here. So we got dollar index, as you said, Shukri, moving quite aggressively. Now I don't know whether this is giving me. Doesn't look like it's giving me real-time data here. Yeah, it does continue to be weak, doesn't it? Is that the not sure if that's real-time data or not, but look at it. That's now through a really significant level. The dollar just cannot catch a bid at all. That needs a pickup. Let's check the VIX again. Yeah, we'd have to check that, Shukri. You're talking about the dollar there, are you? Right, let's have a look. Check the last data points before we call it a day. Right, final manufacturing PMI is now released, and what we have. Well, that's flat. It's only monthly unemployment rate won't be that significant. It's flat, but I think the most significant one is for the German number. Unemployment rate from Italy is poor. So now we may watch this start to come down. So this is where you'll see whether the yellow numbers, are significant, and certainly you'll see whether you like them on an intraday basis. If you like the way that that those numbers look, then those numbers look on the chart. How they react to the chart. Then you'll be able to start looking at some intraday charts and intraday trading. You will likely need the VIX on your side. I don't see the VIX turning around at this stage. VIX is a little bit weak at this particular stage. That the trading view isn't providing me the data I need with the VIX. So we'll see what happens. I would be back for the US show later on, and I'm interested to see whether this is going to be a muted move now in the S&P. And it might be that we travel sideways for a while, but I wouldn't be too uncomfortable holding on right now, even though this is well above my particular price point. I'm not I haven't got too much discomfort just holding on to this, because what we might well, what I'll probably anticipate more than anything else is maybe just some of this until we get the big number, which is the ISM manufacturing. So let's watch out for the ISM manufacturing. That's either going to push my trade into positive territory or negative. And again, you may want to wait for that. Maybe the market even pops a little bit higher. But I'm not going to be probably doing too much until the manufacturing comes out, and just see if it can help me out a little bit. And it will be about that. It'll be about the fundamental data. Can it show some signs of weakness? Do some signs of weakness come into the market from the United States? Because if it does, then we might start to see our move to the downside. The VIX is currently at 2734, still pretty elevated from its lows, but it is weakening somewhat. Dollar index currently sitting at 91.81, and we haven't checked the euro, which I will quickly do. So reaction with the euro is a little bit muted. It's a little bit muted, not anything significant. Let's see what today's bar ends up suggesting. Now, how close did that get to? High of 1.9974 hasn't yet touched the 1.2 level. Now, if that touches 1.2, I think there could well be a turnaround in the euro dollar. So watch out for that that particular number at 1.2. I wouldn't be surprised at all to see a lot of sell orders there at 1.2. Not necessarily a bad trade, actually. To put in a little order at 1.2. Maybe if it hasn't got there by the US show, we'll take a punt on that. Right then, so I'll be back later on. I'll be back tomorrow with Jeff, I believe. Might be Chloe, but I will be back. Yeah, look for those opportunities. Yeah, we'll look for some of those, Shukri. We'll start bringing those into play, I think. Discuss them in a bit more detail in the US session because we'll have a bit more time. But yeah, let's start kind of building up a bit more of a battalion of opportunities and a battalion of ideas that we can start looking at with the market. I will see you later on. Really looking forward to your session later, mate. If you're in any earlier at 1:30, then maybe come and give us a little preview of what we'll be looking at for the US session in the free section. Otherwise, if you're not available, then no problem. I'll see you for the US session. For the rest of you, I will see you in the morning. And to quote a great man, Mr. Jeff Pine, I will say bye-bye for now.